Welcome, tech enthusiasts, to the Friday edition of the Tech Stocks Daily Podcast. Get ready for an exhilarating roundup as we dive into Apple's fiscal magic trick, where astounding revenue records meet not-so-sparkling iPhone news. We'll unravel Capital Southwest's intriguing dividend tax moves that could ease foreign investor woes, while shining a light on Symbotic's sticky situation with dual class action lawsuits causing quite the stir. Plus, we've got electrifying insights into Rigetti Computing's quantum leap on the stock charts, fueled by BlackRock's major investment play. Strap in for the latest twists and turns in tech market, where fortunes shift as quickly as an iPhone update. Buckle up, tech aficionados, because today we're diving deep into the orchard that everyone's buzzing about, Apple. The tech titan has made quite a splash with its first quarter fiscal 2025 results, pulling rabbits out of its hat that both thrilled investors and ignited a torrential rain of applause in after-hours trading. Apple delivered a truly golden quarter that saw revenues reaching record heights of a whopping $124.3 billion. Holy moly, that's just a smidgen past the analyst estimates. Earnings per share soared to $2.40, comfortably breaking past the anticipated $2.36. In any event, while Apple walked the red carpet of revenue, not every category donned its Sunday best. iPhone sales stumbled slightly, narrowing to $69.4 billion, down 1% from where we parked the spaceship last year. What's the deal with iPhone sales, you ask? It seems a touch of slowdown in Greater China's market dynamics, possibly due to changing consumer preferences, threw a pineapple under the front wheel of their growth. But remember, every cloud has an eye-silver lining. Their services division is running hotter than a CPU on overclock, posting a record $26.34 billion. That's like finding a dozen golden tickets in a chocolate factory, folks. Stepping up to the plate, services like Apple Music, App Store, and iCloud are hitting home runs by building a resilient, high-margin revenue fortress around those precious iPhones and Macs. Analysts are enamored, with Gene Munster of Deepwater Asset Management even whimsically downplaying perceived woes, calling them more like cloudy with a chance of meatballs than a real downpour. Oh, and the juicy gossip has it that Apple isn't just resting on its laurels. The company has propelled its cash-rich fortress to shower $30 billion on shareholders through both dividends and buybacks. Talk about treating your investors like royalty. In terms of strategy, Apple seems to be betting the farm on Apple Intelligence, which promises to enhance user experiences and revamp product integration. The CEO, Tim Cook, hinted with a magician's flourish that Apple Intelligence will not just rev the iPhones, but fly them off the shelves by June, with initial uptake data already singing a sweet tune of accelerated US demand. It's like Apple's throwing a party, and everyone's invited to the ecosystem. Looking ahead, Apple is gearing up with an armory of new tech toys, like a fresh iPhone SE, a MacBook Pro like bumbling Inspector Gadget, navigating supply chains like they stole the last Monster energy drink. Once they're done, it's expected to be fourth quarter magic all over again, with credentials to match. So here you have it, people. Apple's turning quite a page with first quarter revelations, inspiring applause for not only what's been accomplished, but more tantalizingly, what's to come. Stay tuned for the next chapter in this gripping Apple saga. It'll be an absolute cracker. Hey tech enthusiasts, today's spotlight is on Capital Southwest Corporation, a name that might not be as flashy as the latest smartphone release, but if you're into finance and investments, it's definitely buzzing on the NASDAQ. So why is Capital Southwest making headlines today? Let's break it down. Capital Southwest, a Dallas, Texas-based business development company, announced the U.S. federal income tax treatment of its 2024 dividends. Now, if you're scratching your head and thinking taxes, don't fret. I promise there's something intriguing here. So what's the scoop? Capital Southwest doled out dividends worth $2.53 per share for the tax year ending December 31st, 2024. All of these dividends are attributed as ordinary income with a sprinkle of net short-term capital gains, rather than qualified dividends. This classification matters big time because it affects how their shareholders will be taxed. For those holding on to their tax documents with sweaty palms, here's a bit of reassurance. The company has detailed the U.S. federal income tax characteristics of these dividends directly on their website. And boy, does it sound like some important reading for any shareholder navigating the tricky world of taxation. Moreover, there's special news for the international crowd. Roughly 92.89% of Capital Southwest's dividends trickle down from interest and short-term capital gains. The excellent bit here for non-U.S. residents and foreign corporation shareholders is that these dividends are generally exempt from U.S. withholding tax, thanks to certain sections of the Internal Revenue Code. If you're a non-U.S. shareholder in a regulated investment company like Capital Southwest, you're in the ring and exempt from these U.S. withholding taxes on long-term capital gains too. Cheers to that. However, don't jump ahead of your skis, especially if you're a non-U.S. shareholder who might have gasped realizing U.S. federal income tax was withheld from your dividends. The company's advice? Give your tax advisor a little call and chat about any refund claims you can make with the IRS. Who knew claiming taxes could feel like negotiating perks? In a nutshell, Capital Southwest, managing to juggle flexibility with its permanent capital base to support middle market businesses, isn't just keeping shareholders on their toes. It's reaffirming its position as a stable anchor for investors wanting those healthy dividend returns while also easing the tax burden for its international backers. That's some savvy financial maneuvering right there. So, whether you're deeply entrenched in investment strategies or just someone who likes keeping tabs on the financial world, keep an eye on Capital Southwest. They're not just doing dividends, they're doing dividends with benefits, making them a noteworthy name on the NASDAQ today. All right, tech enthusiasts, buckle up. Symbotic Inc. is making headlines today, but not for the most flattering reasons. This automation tech company, which focuses on revolutionizing warehouse efficiencies, is under the spotlight in 2 separate class action lawsuits. Let's dig into this juicy story. First off, we've got the folks at Kessler Topaz Meltzer & Check LLP laying down the law. They're informing investors that a class action lawsuit has been filed against Symbotic in the United States District Court for the District of Massachusetts. The plot thickens as they allege that from February to November 2024, Symbotic was up to some accounting shenanigans. Specifically, they claim Symbotic improperly accelerated revenue recognition during its second and third quarter financials last year. Apparently, there was even a material weakness in Symbotic's internal control over financial reporting. Yikes. The cherry on top? Kessler Topaz argues that the optimistic reports coming from Symbotic's corner about their business outlook might have been more fantasy than fact. They're rallying affected investors to step up before the February 3, 2025 deadline to appoint a lead plaintiff for this lawsuit action. Now let's switch lanes to the San Diego-based law firm Robbins, Geller, Rudman & Dowd LLP, who's also bringing their A-game against Symbotic. They're calling out the company for potentially misleading investors, pointing fingers at errors in revenue recognition that boiled down to cost overruns on certain projects which apparently shouldn't have been billable. This oversight hit their second to fourth quarter financial statements, knocking down Symbotic's previously soaring stock price by a staggering 36%. Imagine seeing your investments whittled down by over a third overnight. Talk about a financial nightmare. Both lawsuits revolve around Symbotic's self-disclosed errors regarding revenue recognition. Let's not forget, they even signaled that their financial statements should no longer be relied upon. Oh, the drama. In the age of transparency, financial misstatements can swallow trust and bear a greater cost than the actual dollars lost. What's at stake here? Beyond financial restitution for the fuming investors, these lawsuits are important reminders for tech companies escalating towards innovation. As cool as your tech might be, making good with the SEC and gaining investor confidence means playing by the rules. No shortcuts. Still, for those holding Symbotic stock, this might be a crucial moment to reassess investments and strategies moving forward. And hey, if you're considering stepping up as a lead plaintiff, the clock's ticking with that February 3rd deadline just around the corner. So, as you digest today's tech news brewing with lawsuits and reckonings, remember to keep an eye on the broader implications. Whether you're a stockholder, a business, or an enthusiast of the tech world, financial transparency and accountability are what make or break trust and ultimately success in the tech arena. Stay savvy out there. Hey tech enthusiasts, let's dive into what got everyone buzzing about Rigetti Computing today. This quantum computing powerhouse has certainly grabbed the spotlight, not just for its cutting-edge technology, oh no, but also for its dramatic stock market maneuvers. First up on the docket, Rigetti Computing's unusual surge in options activity is what turned heads. Imagine this. Our friends at Rigetti saw a whopping 39 uncommon options trades bustling on their radar. A smidge over half of these traders, 51% to put a finer point on it, are feeling pretty bullish. How could you not be with the kind of quantum magic they're whipping up? The bears in the bunch sat at 41%. Who knew quantum could feel like high-stakes poker? But that's the charm. Now, what do those numbers translate to? Well, significant investors are speculating with their wager sliders set between the $1 to $20 range. With all the activity focused there, it's like finding an epicenter in an earthquake of market interest. For the uninitiated, in the options market, tracking volume and open interest is akin to peering into the soul of market sentiment. Deep stuff, right? But wait, there's more to the tale. Enter BlackRock. Yes, the world's jewel and asset management infinity gauntlet stepped into the quantum conversation by ramping up their stakes in Rigetti. They're rolling all in, snapping up shares like a kid in a candy store. How'd it play out? Well, BlackRock's quantum leap saw RGTI stock's value surge by an astounding 477%. That's not a typo, folks. Could it be some insider's fortune-telling blueprint, or just another thrilling day in tech? I'll leave that one up to you to interpret. Why should you care, you ask? Besides your chance to nerd out, Rigetti's swell in valuation spoke volumes for quantum computing's prospective boom. Google's whispers of their new Willow chip fueled a frenzy, impacting stocks like a viral sensation faster than the latest TikTok dance craze. And let's not forget our good old buddy BlackRock, who's also rather bullish about everyone's favorite cryptocurrency, Bitcoin. It's as if they're crafting a portfolio that's part James Bond, part Star Trek. So Rigetti is not just redefining quantum possibilities, it's redefining market narratives alongside global giants. Which leads me to throw down the gauntlet. What do you think all these quantum ripples mean for the tech world? Is this just a blip on the stock market radar, or could we be charting momentous pathways to revolutionary tech? Drop your thoughts down there in the comments section, like they're worth $1 trillion in Silicon Valley sparkle. Whether you're bullish, bearish, or you just thought quantum was about leaping cats, I want to hear from you. Spark up that conversation. Who knows, you might just make someone's quantum leap worth the hype. All right, tech enthusiasts, focus those stock market magnifying glasses on Rigetti Computing as we dive into strategic moves. Based just on today's quantum surge in stock activity, with a scorching 14.77% leap after BlackRock's wild investment party, here's my spicy take. Might be the strategic choice if you're already invested. Here's why. There's undeniably wild excitement cast by a leading asset manager like BlackRock cranking up its bets in Rigetti, signaling confidence. And in the ever-thrilling realm of quantum computing, the value spike and promising surge in options trading paint potential growth stories on Rigetti's cafe wall of tech sciences. Why not buy right now, you ask? Well, Rigetti's newfound spotlight feels rather speculative. While quantum computing seduces with possibilities of ushering us into a Star Trek-esque future, remember, the market allure is largely futuristic and rife with risk as the sector's capabilities grow. Not yet invested? Beware of riding the frothy wave simply due to the hype-addled upswings. Quantum disruptions are serious long games, and it's vital to weigh any promise against potential unknowns and Roberta Sparta astrographic clusters. My rebellious fellow tech traveler, corroborate these flashes with further research or your own trusted financial projectors, the rigorous kind like Gandalf consulting Middle-earth's charts before winter. And don't forget, walk softly, swing smartly, and pack data-powered dreams aplenty. Always dive deeper before diving in. Today's market had all the twists and turns of a tech thriller. Apple stole the spotlight with its dazzling fiscal results, even if iPhone sales hit a tiny snag. Capital Southwest unpacked some tax drama that would make any CPA break into a smile, while Symbotic found themselves under not one but two legal microcorridors of scrutiny. On the quantum edge, Rigetti Computing sent stock pulses racing after a remarkable leap thanks to some BlackRock magic. Take from today a reminder of how quickly fortunes can shift in the NASDAQ jungle. If you enjoyed the breakdown, remember to like, subscribe, and share that tech wealth with your friends. Swing back on Monday for more electrifying updates, and in the meantime, have a tech-tastic weekend.